We have got to start today with liquidity because when liquidity shifts, markets shift. Raoul Pal recently sat down with Michael Howell, the chief executive of Cross Border Capital, on Real Vision's Journeyman series to unpack where the global liquidity cycle stands right now and what it means for investors. Their conversation painted a picture of a cycle that feels stretched but not yet broken, with both agreeing that we are late in the game, but the finish line isn't right around the corner. Howell suggested early 2026 as the likely turning point, while Pal leaned toward mid 2025 before any reversal becomes obvious. One of the most striking takeaways from their exchange was how deficits are now being monetized in ways that look quite different from the textbook Federal Reserve balance sheet expansion we saw in earlier cycles. Howell pointed out that the Treasury General account and the increasing reliance on short dated bills are now key moving parts. Pal described this as moving from a simple Fed net liquidity game into a more complex total liquidity calculation, where private banks and even stablecoin issuers act as conduits for government borrowing. In other words, liquidity today is no longer just about central banks. It's also about how the plumbing of global finance pushes cash around. The conversation inevitably circles back to inflation. Powell was quick to underline the difference between monetary inflation, essentially currency debasement, and the day to day price changes consumers notice at shops. Productivity gains or cheaper imports can mask what's really happening underneath. Howell agreed that investors need to keep their eyes on monetary inflation because even if retail prices look calm, money is still being diluted. Whenever cycles run late, comparisons creep in. Howell revisited 1987 when the Plaza Accord, rising bond yields, and a sudden equity sell off rattled markets. He warned that this current cycle has some echoes of that period. Pal then dismissed the risk but emphasized that liquidity might still hold up long enough to keep markets buoyant for a while. The pair then did a global tour. In Japan, Howell noted pressure at the ultra long end of government bonds, which could push investors toward equities rather than trigger a wholesale panic. Pal added a geopolitical angle, wondering whether Washington quietly prefers Tokyo to tolerate a weak yen. In China, Howell pointed to fresh liquidity injections by the People's Bank of China that are nudging investors away from bonds and toward equities, with commodities often following that path. Pal argued that rising Chinese yields shouldn't automatically be seen as distress. They can signal recovery instead. Across Europe and the UK, the problem looks different. Higher yields are being driven more by supply than by demand. Howell argued that bloated welfare systems and heavy debt issuance are pushing governments into difficult territory. Pal observed that Britain and France are being punished in bond markets, sparking concerns about fiscal sustainability that many thought were reserved for Italy or Greece a decade ago. So, where does this leave investors? Both agreed the cycle is late, liquidity is abundant in patches, and risks are mounting. The key is staying alert, not just to central bank moves, but to how governments issue debt, who is buying it, and how that flows through into currencies, bonds, equities, and commodities. Whether the turning point lands in mid 2025 or early 2026, vigilance is the watchword. Now let's shift to something much closer to the ICP space, that is interoperability. Plug, the wallet many of you already use, has rolled out an update that brings full Ethereum Virtual Machine support. This means users can now access Ethereum, Base, and Arbitrum networks directly from Plug's extension and mobile app with the flexibility to add even more chains through settings. This isn't just about convenience. It's part of Plug's bigger push to make chain fusion, which is the bridge between Ethereum and Internet Computer Protocol, a practical reality. With EVM support live, users can expect broader access to swaps and more fluid asset management across networks. It's a move designed to smooth the user experience while expanding the possibilities for decentralized applications. The interesting part is that Plug hasn't limited the update to a single chain. By launching with multiple EVM networks from the start, it ensures that users who are already comfortable with Ethereum or Arbitrum can engage right away without friction. For the internet computer ecosystem, this is an important bridge into a wider community that has often operated in parallel but not truly integrated. Developers have been watching to see how Plug would handle this stage of expansion. So far, the update feels less like a flashy one off feature and more like laying a solid foundation for long term growth. If adoption follows, this could be a meaningful step toward making cross chain activity a daily reality rather than a technical headache. And speaking of strengthening the internet computer, our third story is about privacy and trust at the hardware level. Dominic Williams has confirmed that ICP nodes are beginning to activate trusted execution environment functionality, something many in the community have been waiting to see. For those unfamiliar, a T is a hardware based security feature built into many modern CPUs. It ensures that even if someone has physical access to a machine, they can't read or tamper with the data because everything leaving the processor remains encrypted. On internet computer, this comes through AMD's SCV technology, which allows entire virtual machines to run inside a secure environment that can be publicly verified. What does this mean in practice? Williams outlined three main advantages. First, it addresses concerns around HTTP gateways, which connect smart contracts with ordinary web browsers. With SEV, users can verify that gateways are executing the correct code instead of simply trusting the operator. Second, ICP nodes themselves are being upgraded, giving stronger protection to the cryptographic key shares distributed across the network. Third, when entire subnets become SCV enabled, every canister on those subnets will have its state encrypted, making it impossible for node operators, even malicious ones, to peek inside. The rollout has already begun. Gateways hosted by the Definity Foundation have completed their transition, and the first mainnet nodes are expected to follow within weeks. A wider deployment will take more time, partly because older Gen 1 nodes with weaker SCV need to be retired, and partly because subnet recovery is complex when states are fully encrypted. The direction of travel is clear though. As more nodes switch to SEV, users and developers can expect tighter assurances of data privacy and system integrity. It's a major step in reinforcing trust, especially for applications that handle sensitive information. So, to recap, liquidity remains the master key for global markets, with late cycle dynamics raising the stakes for investors. Plug is broadening horizons with EVM support, making ICP more connected to Ethereum's vast ecosystem. And Internet Computer is entering a new phase of hardware level security with trusted execution environments. That's all for today's stories. If you found this discussion useful, I would really appreciate your support. You can donate to help us keep producing these updates. Wallet details are in the description below. You will also find links to all the stories we covered today, as well as a link to sign up for our newsletter so you never miss an update. Thanks for watching, and I'll see you in the next one.